All right. Well, welcome everyone to this LinkedIn Live, where we will be discussing venture capital trends in the travel industry. So just as we wait for the audience to populate, I'll just run through a little bit of housekeeping and make some introductions. So I'm Pranavi Agarwal. I'm a senior analyst at Skift Research, and joining me today are Justin Dawes and Aaditya Ugale. So Justin Dawes, he covers all things tech at Skift. And he also keeps a sharp eye on the funding activity in the travel industry as well as M&A activity. And he's going to provide an on-the-ground perspective on VC trends in travel that he's seeing today. And also joined by Aaditya Ugale. He's an intern on the research team, and he's been assisting us with writing this latest report on venture capital in travel. So speaking about the report, this is a QR code for a link to the full report, so please do check that out. It's also available on research.skift.com. All right, so let's get straight into it. So what are we going to talk about today? So I'm going to run through some headline trends before passing it on to Adi, who's going to talk us through a regional breakdown. Then Justin is going to provide his on-the-ground perspective on what he's seeing kind of in the startup world. After that, we will discuss some key investable themes that have emerged over the last couple of years. And then we're going to conclude with our forecast for 2024. Just as a heads up, we'll also have some time for some Q&A. So please do put your questions in the comments box on this LinkedIn Live, and we'll get to them towards the end of the session. All right, so let's get straight into it. So this really is the headline chart. In 2023, venture capital funding into the travel industry hit a decade low, only $2.9 billion of VC investment in 2023. Compare that to nearly $9 billion in 2019. And really the pattern that you can see here is, as you can see on this chart, is that there was that initial drop in 2020, but in 2021, there was a substantial recovery. But really since then, funding levels have really dropped pretty much consistently every year. And today funding is, around 70% below 2019 levels. And we can see on this chart that, generally, though the average deal size has generally increased from 2012 to 2021, in the last 2 years, we have seen that deals have gotten smaller in size. And you can see on this chart that travel VC funding as a percentage of the total VC market has dropped as well. So travel used to be 3% of the total VC market in 2019, and that's kind of dropped to 1% today, which is nearly at an all-time low, just a little bit higher than what we saw in 2009, 2010, post the GFC. So clearly it's been a tough couple of years for the travel venture capital market. You can see on this chart that in 2020 and 2021, the travel VC market did lag the overall VC market. But you can see that in 2022 and 2023, that is kind of equalizing a little bit. You can see that this trend is not just specific to the travel industry. So in 2022 and 23, the travel VC market has been down in line with the total market. So generally what that means is that venture capital investment in general is down across kind of most sectors. And that's really down to, I think, kind of more macroeconomic factors. There's been high interest rates, macro uncertainty, pretty volatile valuation levels. So really showing that in the last couple of years, this is not just a travel-specific trend. It's something we're seeing across the board. And you can see on this chart on the left here, the total VC market is also down compared to 2019 levels today, but it's only 5% down. Whilst you can see on the chart on the right, the travel VC market is down 70% below 2019. So that travel market does have a long way to go before it recovers to those pre-COVID levels we were seeing in 2018, 2019. So kind of in line with that kind of struggling funding environment that we're seeing amidst that macroeconomic uncertainty, we are seeing that there's an ongoing shift towards late stage deals. And I think this is very different to what we saw in 21 and 22. As you can see on the chart, there was this huge surge in VC funding for early stage startups. But as you can see on this chart, in 2023, there was a drop in funding across every deal stage besides the late stage Series F funding round. So it really goes to show that in today's environment, when investors do decide to invest more money, it will be in those safe, mature companies. And I think it was really Get Your Guide that really led that Series F funding round in 2023. Obviously, a very mature company in the experiences space, and we'll get to that a little bit further on in this LinkedIn Live. But for now, I'm going to pass over to Aaditya. He's going to walk us through what we're seeing region by region.
Thanks, Pranavi. So from what we're seeing over here, we saw a 40% year-on-year decline in venture capital investment. And this was mainly led by North America with a 70% drop and Europe with a 27% drop. In terms of regions where we saw growth, Asia saw a 10% growth, and the Middle East and South America saw massive numbers with 570% and 128% respectively, thanks to companies like Beyond, which is a premium leisure airline. And South America has been seeing growth for the past 4 years, with the exception of 2022, thanks to companies like Ayenda Hotels, Busser, and most recently OnFly, which is a travel expense management company. But in the grand scheme of things, moving on to the next slide, we can see that there's an eastward shift away from North America, with companies with regions like Europe gaining more traction and growing, with more stable now leading the pack. The reason why this is happening, this eastward shift away from North America, it could be attributed to many reasons: the SVB crisis, economic uncertainty, and even interest rates, which we'll touch upon later in this presentation. Asia, on the other hand, has doubled its numbers thanks to companies like Klook and Huangbao and Sami Hotels, which essentially are based in countries like India, China, and Singapore, all fast-growing markets. While we did see massive growth percentages for the Middle East and South America, overall, they're still relatively small percentages in the grand scheme of travel venture capital raised in terms of regions. Moving on to the next slide, the key word over here is fragmentation. Now, in 2021, all the top 10 countries took up 91% of venture capital raised, leaving only 9% for the rest of the other countries. Now, this has changed in 2023, where the market has become more fragmented, leading to the rest of the world having 15% of venture capital raised in travel to work with, and the top 10 countries only taking up 85%. Most importantly, we're seeing countries like India raise in ranks from number 7 to number 5, and we're seeing countries like Canada drop in rank out of the top 10 percentages. And we're seeing the bottom 9th and 10th position taken up by Middle Eastern countries like Israel and United Arab Emirates. Now, to understand this more better, we'll see Justin, who is going to be telling us more about what he sees on the ground with his travel reporting.
Yes. Hello. Thanks. So I do every week I do a funding roundup. It's an article where I cover any travel related startup that's raised funding that week. So if you are a startup in the travel industry and you're listening and you're raising money, let me know, and we'll maybe cover it. But so I'm able to, and I keep track every time, like every week I keep track in a database of the companies, how much they're raising, who the investors are, etc. And I've seen a few interesting trends so far this, like through June. I looked at like the halfway point at some interesting trends in 2024 versus 2023. And one thing that I thought was really interesting that reflects what Pranavi was saying is the shift to larger deals, like later term companies. So looking at through June, looking at 2024, there were 20. I covered up 20 companies that raised at least 50 million. That's this same time in 2023, there were only 5 that I reported on anyway. And same with, in companies that raised at least 100 million. so far in 2024, I've reported on 12. 2022, that number was 2. And so, yeah, I mean, it's a really interesting shift. I mean, that's quite a significant number for companies that have raised over 100 million versus last year. And at the same time, I'm seeing a lot more smaller deals, like 3 million, 4 million, maybe not quite so much in that middle range. So the most recent funding roundup I did, there were 17 startups on there. A couple of them raised 90 million, one was 30, but almost all of them were less than 7 million, which is really interesting to see that. Yeah, so let's go to the next slide. I'll go through a couple of the companies this year that have raised money. So yeah, TravelPerk, that's a corporate travel management platform. They raised 104 million earlier this year, and that's one area where I'm seeing a lot of money being raised in a lot of different platforms around the world. Really, a lot of it's smaller raises, but TravelPerk is raising quite a bit of money there. Muse is another one. They raised 110 million earlier this year. And then that was, I mean, recently that they had raised 185 million. So that's a hotel tech company. It's a property management system. So deals with like check-in, check-out, that kind of thing. A lot of companies in that area too are raising money as a way to, I guess, supplement. There are a lot of different reasons post-pandemic, but to supplement the workforce issues, right? What else do we have there? Yeah, rewards like loyalty. InDrive is one that's like an Uber type of company. They raised 150 million. So yeah, I think. Oh, and there's also a lot of money going into next generation aircraft, like flying taxis. A lot of money in those things. Also seeing some fundraisers, some smaller fundraisers, I would say, in loyalty things, eSIMs, travel insurance, some short-term rental management like Guesty. Yeah, so it'll be interesting to see where the second half of the year goes, and pay attention because I'll do at the end of the year I'll do a roundup, like a report showing the insights of what I've learned. We'll see. Yeah, we'll see what happens the second half of the year.
All right, well, thanks, Justin. Yeah, so to kind of put in context what Justin was saying, I'm going to discuss some of the themes that we're seeing in the VC funding round. So he gave a few examples, and what we've done is we've put them into kind of thematic buckets across the last 4 years. So as you can see on this slide, really in 2020, in the days of lockdown and COVID, it was really short-term rental companies such as Sonder, Evolve. Those kind of companies really dominated VC funding. And I guess that's of no surprise, really, because that's in line with that boom in demand we saw for short-term rentals during 2020 and 2021. But you can see kind of really in that yellow bar on this chart, we're really seeing this shift in the last few years towards more tours and experiences companies. Those are companies like Get Your Guide and Klook. I think we've already mentioned them, but they're really leading VC funding in 2023 and 2024. And you can see on this slide that, we already saw that there's an overall decline in VC funding in 23 as compared to 2022. But here you can see that there are really clear pockets of growth within really key areas of investor interest. So those are tours and experiences, AI, hotels, hospitality, employment. And you can see on this slide that actually the two most funded companies in 23 were those companies in the tours and experiences space. So Klook in Asia and Get Your Guide in Europe. And yeah, these are two private companies, two private OTAs in the experiences space. They've really received a lot of funding over the last few years. They're both valued at more than $1 billion. So that, they're called, you can call them unicorns in the private space, private companies that are worth more than $1 billion. And, really shows how opportunistic and how attractive experiences is as a sector to be in the travel industry at the moment. And then another important trend that we're really seeing is, it's AI. It's of no surprise that companies in that kind of AI, data, automation theme, that bucket, that they're seeing an increase in VC funding in 23 versus 2022. But I think there are some nuances to just kind of point out when it comes to AI as a thematic bucket within VC funding. So you can see from some quotes on this slide. So at our recent Data and AI Summit, we had some VCs on stage, and some of the kind of takeaways I took from it was that investors aren't just investing in AI for the sake of AI, but they're looking for companies that can use the best of AI. And those are the companies that will be the highest quality companies, the ones that are integrating AI most efficiently already into their existing operations. So yeah, I don't think that AI in itself will see more funding. We are seeing some funding for it at the moment, but I think in the future we'll rather see funding for companies that have integrated AI into their business efficiently, rather than AI as a thematic bucket in itself. And earlier, kind of Justin said that he was seeing some larger deals, which is positive, considering that the last 2 years the average deal size has really decreased. But you can see that our predictions for 2024 are pretty optimistic, and that we do think that there's going to be an uptick in funding activity in 2024. So we do predict that in terms of the amount of VC funding raised, that will be increased compared to 2023, but a few nuances again to point out here. We think that there will still be fewer absolute number of deals, but for those deals to be on average larger in size as compared to 2023, and that ties in with what Justin is also seeing on the ground. So overall, we do expect an increase in the dollar amount of VC funding that's going to be raised in 2024. And that actually ties in with this pretty kind of optimistic view that those negative macro factors that really affected funding in the last 2 years, as those factors start to ease off into 2024, as we start seeing cuts in the interest rates, I think we will see an increased appetite for VC funding. And you can see on this chart that there's actually a very good correlation between interest rates in the US, at least interest rates in the US, and VC funding raised for US travel companies. So just kind of based on this chart, you can see that for every 0.1% decrease in the US interest rate, that could see an increase of $50 million of VC investment into travel industries. So, reasons to be a little bit optimistic and reasons to be a bit cheerful as we go into 2024. So on that cheery note, I'll conclude the presentation side of this LinkedIn Live, and we'll open up the floor for Q&A. So yes, please do put any questions you have in the comments box, and we'll get to them. Perhaps just as we wait for some questions to come in, maybe I'll just kick it off and kind of ask the floor some kind of questions of my own. Maybe Justin, I'll kick it off with you. So what trends are you seeing on the acquisition side of things? Like, how does the state of venture capital relate to the number of acquisitions and M&A activity that's happening right now?
Yeah, I mean, there have been a lot of there have been a lot of acquisitions just in the past few weeks, couple of months. I mean, sometimes it's on a daily basis. There's an acquisition announcement. A lot of them are smaller deals, like acqui-hires. And yeah, I think that is a result of the downturn in venture capital. It's sort of it's a big complicated thing, but the way it worked is like there was an uptick in venture capital, during the pandemic. And I think there were a lot of companies that maybe didn't have the best business model, shouldn't have been funded, but they were, for various reasons. I mean, there wasn't a way to show that you were bringing in revenue as a travel company, because there were no travelers in 2021. So I think companies were taking a little bit of a risk. But now that the pandemic is behind us, those companies that raised money are running out of money because maybe their business model isn't the best, so they're not generating enough revenue, and now they need to go back to venture capital to raise more money to keep their companies going, and they're not able to. So that's led to shutdowns. That's led to a lot of acqui-hires, acquisitions, and I think that's going to keep going. I mean, that's what I'm hearing. Like, it'll keep going through the end of the year, probably into next year. There's just consolidation, and some of these companies like Muse that are raising a lot of money. Part of the reason that they're raising money is to buy up some of these other companies and sort of consolidate the industry. So yeah, I mean, we'll see a lot more of that going forward, for sure.
Yeah, I think so. We have an interesting question in the Q&A here. So in addition to acquisitions, what about IPOs? What do you think is due to come from, some companies going public? I think a few companies have been saying they want to go public for a few years, but it hasn't been the right time. But do you think there are any that might go public this year or next year, perhaps?
Yeah, I mean, it's hard to say. I think we can expect it. Yeah, and when because some of these companies that have raised so much capital, I mean, the goal would be to have some kind of exit either through an IPO or an acquisition by like venture capital or something, or I mean by a private equity. So then all of their investors can get a payout, right? That's kind of like how that works. So I mean, yeah, I did a story with Guesty, for example. Just recently, they were at the short-term rental summit, and he was talking about potential for an IPO. I mean, we've heard that from Navan, the corporate travel company. So I think there are some that are coming. Yeah.
Yeah, I think to add to that, I think we are seeing the start of more IPOs coming. So I would point out some companies in India. So Ixigo, which is a OTA in India, that recently IPO'd, and we've of course heard from Oyo that they might IPO at some point, as well as Leela Hotels, which is a luxury hotel brand in India. I think they said that they might be IPOing at some point. So I think we are seeing the start of it. And, I earlier on, I mentioned that there's that increase in Series F funding led by companies like Get Your Guide. And when you're funding at Series F, Series G, you would expect an IPO from them at some point. So I think as the market stabilizes a little bit, we should see a little bit more IPO activity as well in the next couple of years. So we have an interesting question here from Bobby Demery for you, Justin. Do you believe that we will see in the very short future some big sustainability innovation in travel tech? It's an interesting one.
Yeah. Hey, Bobby, we've spoken a couple times. So, yeah, I mean, I think so. I mean, there are definitely companies that are working on that now. I think a big issue with it is there's just not, what's the word? There's just not a lot of consensus about sustainability goals and what that looks like. There are definitely companies working on it. I think we will see more of that. It'll be interesting to see how it rolls out, though. Yeah.
Adi, we have a question from you from the audience. So you said there's a shift eastward, but from which country did the most VC investment come from in 2023?
Well, to nobody's surprise, it has to be the United States. And basically, the United States led the charge again. And even though they dropped an overall percentage compared to 2021, they were initially at 28% of all the VC investment in the world. And now they've dropped to 25%. But we still see them lead the charge in terms of the top 10 countries that are gaining all the investments. But this does not change the fact that North America as a region is still falling in percentages, as we lost countries like Canada from the top 10 percentage factors. And not to mention, we have countries like India and China growing rapidly that are taking up a lot of percentages too.
Great. I think we have a question for you, Justin, here.
Mhm.
So yeah, this is a good question. So where is the capital coming from? Is it mainly from travel specialist investors or general investors? Are there any particularly big deal makers to point out?
Yeah, so as far as like travel specific investors, there aren't really that many travel capital, like travel venture capital firms. The ones that do exist are usually focused on like smaller deals, and they usually come in, not always, but they usually come in as like a, not a lead, but as a supporter. Um, but they do exist for sure. And actually, Bobby Demery is one who started one just recently. So yeah, I mean, I think with the bigger ones that I mentioned, the bigger fundraisers that I mentioned, these are big venture capital firms that are focused on high growth companies, and they're interested in multiple industries, and travel is happens to be one of them if there's a high growth company. So yeah, for example, I mentioned Travel Perk, um, that their 104 million just recently was led by SoftBank, which is doing all kinds of things with AI and tech and um, lots of things outside of the industry. I mean, there's also General Catalyst who's involved. I think I'm going to say it wrong, but Kinnevik. I think I'm saying that wrong, but that's behind Muse, Insight Partners. So yeah, I mean, a lot of that with as far as the bigger deals. Some of the corporate arms, corporate venture capital arms like JetBlue Ventures and Southwest. Some of those are getting really involved in uh, like jet fuel, like sustainable jet fuel, like renewable jet fuel. Um, there's a decent amount of money going into that. Also, some of them are doing like loyalty startups. So usually the corporate venture capital arms are a little more focused on things that are very industry focused. Not always, but sometimes the goal with those companies is to fund a startup that they can eventually either become a customer of or maybe acquire, something like that. Not always, but that's typically the goal.
Yeah, so you said a lot of investors are looking for high growth, but I think we're kind of that high growth era is kind of behind us. Now as we go into kind of 24, 25, this is a question from Eras Buso really. He's saying, what do you observe as the major motivations for VCs to invest in travel as perhaps that high growth era is kind of behind us?
Yeah, so let me say that again. So the major motivations for VC to invest in travel. Yeah, I mean, it's hard to say. I think one thing, like with the tours and experiences area, for example, um, and also like the ground transportation, there's a lot happening with like bus ticketing and that kind of thing. Um, these are both areas that are old, like they're old industries, but they're living in the 20th century a lot of the time. And like some of these companies are literally using pen and paper to um, keep track of operations, ticketing, etc. So I think there's a lot of money going into just digitizing some of these old travel industry sectors. Same with hotel tech, right? Like there are still hotels around the world that are literally using pen and paper to keep track of things. It's kind of mind-boggling, but it's true. Um, and yeah, so I mean that's why a company like Muse or Cloudbeds or whatever is focused on bringing these companies in the 21st century. So there's a lot of value in that type of thing for sure.
Yeah, I definitely agree with that. I think any company that can allow other companies to become more efficient. So we talked a little bit about AI, but also any kind of corporate management or expense management or room management, revenue management, all these kind of companies, I think, are seeing huge amounts of funding because they're allowing for that increased efficiency in the travel industry, which is really interesting. I think I'll open up this next question from Clifford Katz to the both of you. So he's asking, how much investment are you seeing in travel adjacent companies? So companies like wellness and health. Yeah, wellness and health. So yeah, I'll open up to both. Adi, if you have any thoughts on that as well.
So, from my analysis, there seems to be a lot of companies that are very travel adjacent because they tend to focus more on sustainability and more on AI aspects of travel, but they might not necessarily fully be in travel. Wellness and health tourism is something that's still relatively new, and a lot of people still haven't understood properly on how to capitalize on it because of this new market that's still emerging. There's some people that I've been speaking with in the past who are trying to expand this market and make this a lot more accessible to people and make it more aware to those that are trying to enter this market. So from what the analysis that I've seen, wellness and health tourism isn't as much of a focus as it's more of a as much as they're focusing on travel experiences right now. That's what is the golden egg right now for the VC investment market, from what I'm seeing.
Justin, do you have any?
Yeah, I mean, I would agree with that. I think I haven't seen a ton in that space, but I have seen some things, especially companies that are maybe helping hotels, for example, find a new revenue stream by maybe giving out day passes to their wellness facilities for maybe a traveler or even a person who lives there in that area who wants to just go to the spa but doesn't want to stay there. So resort pass, I think it's called, is one example of that. And there are also I've reported on a couple of fundraisers from a company or two that does like gym day passes or think like yoga studio day passes for travelers who are in the area who just, they want to go to the gym, but they don't have a membership there. So not a ton, but there's a bit.
Yeah, I think I'll also add a little bit, perhaps not in wellness and health, but travel adjacent. So one company that has really raised a lot of money is InstaWork. So that is a company that deals with kind of on-demand staffing and recruiting for employees in the hospitality and kind of leisure industry. And they raise a significant amount of money. So in 2022, I think they raised about 8 million, but in 23, it was kind of like 60 million. But at the time they said, oh, we don't actually want to raise any money. But then they got really excited about AI and the applications that AI could have on their business to kind of allow for that more efficient pairing of workers with jobs. So kind of twisting it back to the role that AI will play into all sorts of companies. So that's really an interesting one. I think so. Both of you talked a little bit about experiences, and we've already seen that that's been a really key theme that's emerged in the last couple of years. And I think we'll just end with this last question. Why do you think chosen experiences are leading the pack for VC funding? What is so attractive about this category to investors? Maybe I'll kick it off with this one. Yeah, I think you could say that experiences is really that last frontier of travel. It's very, very fragmented. It's very offline. So there's a big opportunity for all stakeholders in the industry to really tap into that market. And we're really seeing kind of big players, the OTAs, these aggregators that are really trying to bring that supply online and also trying to consolidate some of that supply under one platform. But because it's so fragmented, because there will always be kind of niche experiences, I think it makes it a very opportunistic sector to be in, because I don't think there's going to be one kind of main leader that comes out of it. I think there will be a lot of regional leaders, a lot of niche players that will try and tap into those kind of niche pockets of experiences. So it's very, very attractive sector to be in, especially as that online penetration really increases. yeah, and I think we'll see a little bit more from those kind of companies. Get Your Guide and Klook. I think we will eventually see an IPO from them, which will be really, really, really big for the sector, because a lot of the companies in the experiences space is still private. You have a few that are public, Viator that's owned by TripAdvisor, Amusement that's owned by TUI. So a few of those are kind of public, but yeah, I think we can see a little bit more. We'll see a little bit more activity from that space. Anything else you guys want to add on that?
No, I think you covered it really. I would just say again that, yeah, I mean, a lot of it is very offline. Like, a lot of these companies are very mom and pop, like tour operators. And so, yeah, I mean, I think technology is not on the forefront of their minds. And so if there's a company that can come in and show them how this tech could basically transform their business, there's a lot of opportunity.
Yeah, and you have companies like Peak, which deals with kind of tech, and they have some huge investors. I think co-founder of Twitter and stuff like that. I might be wrong on that, but some huge names that are investing into this sector as well. All right. Well, I think we've come to the end. Thank you everyone for your questions, and thanks everyone for tuning in. So I'll just go to this QR code again. So yeah, please do check out the full report for kind of deeper insights into what we've discussed today. And yep, that's that QR code, the QR code, which will take you straight to the report. All right. Well, thanks everyone. Have a great day. See you.
Thanks.
Thank you.